9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good Monday morning. We're counting down to the open markets in Greater China. Let's get to your top stories today. Korean stocks leading these gains across the Asia-Pacific as the AI-driven rally gains further momentum, shrugging off ongoing concerns and tensions in the Middle East.
Oil rises. Meanwhile, as President Trump rejects Iran's new peace proposal, calling it, quote, totally unacceptable.
Also ahead, U.S. officials say Trump is expected to press Chinese President Xi Jinping over China's approach to Iran when they meet in Beijing later this week.
And China's export growth defies shipping disruptions caused by the Iran conflict. The war shock may further lift factory gate prices due this hour. All right, we begin the week here, of course, still with a lot of headline-driven news here, where you have both sides, the U.S. as well as the Iranians, rejecting each other's latest peace proposals. You are seeing oil markets a little bit elevated here today. Whether the tech trade continues, I think just given the tailwinds that we saw from Friday from the Philly Stocks Index, certainly shows that maybe North Asia can still outperform. But again, we got to bring it back to the top story here on where this leaves the situation, the ceasefire, and the like, as we count down just days away from this Trump-Xi summit in Beijing.
Which is going to be interesting because we were just pointing out there, right? White House officials are saying that Donald Trump might press China to do a lot more on the story. And I think on the China side, on the economic side of things, we got trade numbers out of the weekend out of China. That does show that collapse in energy imports. So fundamentally, it is showing up in the Chinese economy. We'll see what that looks like, of course, in the form of inflation this hour. Because initially in March, we already did see that spike in PPI prices, right? And so you have two largely parallel stories that markets are digesting today. Parallel meaning, I think, there is one that is happening largely divorced from the other. So Brent, as you can see, is up 4%, but at the same time, Korea is up 4%. So those two things are not mutually exclusive, and as far as risk appetite is concerned. There we go. We now have some breaking news right now. China is confirming the trip to take place from middle of this week. And of course, we have a whole special coverage plan for you guys ahead of that. Just going into the session today as well, something of note is how both leaders frame the touchy topics of Taiwan and also AI, which is going to be interesting to see. An AI story, of course. There we go. We're up 3% in Korea today.
Yeah, that's going to be interesting how they address these hot button issues or whether they actually do get addressed in a meaningful way, right? I think most of our editorial thinks that this could be a nothing burger. But then again, it does seem to think that, both sides need a bit more time or buy more time here, of course, as President Trump still battles with this Iranian war as well. But certainly, the fact that the Chinese have finally confirmed this, right? We were waiting, they're kind of the last sort of party to join in, right? And so certainly now that has been confirmed, it seems like all things are going to go on schedule here. But yes, whether we do get any sort of deliverables is going to be quite telling as well, whether it's tariffs, you mentioned about chip exports here, and the PPI prices, right? As you mentioned, you're starting to see that pass through across this part of the world. PPI prices are expected to be at 1.8% in April in China as well. So we might see more of that here this time around.
Yeah, well, consumer prices are actually not expected to pick up a lot more compared to
still
March.
in positive territory.
Still positive. So, but it's really playing out to the point you're making, right? It's mostly on the wholesale price inflation where the Iran story is showing up in the Chinese numbers. And of course, later on as well, we'll talk more about with the economy here with Xiaojia out of Credit Agricole. Just to also mention that, right? So AI, we talked about the memory side of things, and Yvonne mentioned that 11% rally we had on the stocks index. On the China component side of the AI story, we have lots of news to get into from Alibaba, the information and DeepSeek looking to go into this massive funding, around $50 billion. So there's a broad cohort of AI.
You saw it in the trade data, right? Yes, you saw when it comes to energy imports did sort of decline. But then you take a look at what really contributed to the export picture, what contributed to the import picture. AI-related stuff.
Yeah.
Right? We saw huge spikes here. And when you're talking about even just green exports, right? The whole ESS, the whole batteries, EVs, anything related to the EV supply chain, those were pretty much saw big price spikes there, or at least spikes there in terms of the numbers. So, solar, all the like here, you're starting to see maybe these export tailwinds can continue as long as the external picture and demand picture doesn't change too much because of this.
Yeah, well, the business as usual, right?
Yeah.
A lot of folks in the market markets have moved on, whether that's AI or, at least in this case, of course, this energy transition that obviously the war has accelerated. Right. Why don't we get to the top story, right? So we woke up this morning with President Trump saying he has rejected this latest peace offer as unacceptable. Now, according to a Wall Street Journal report on the back of the reasons behind that decision here to call it unacceptable, Tehran had offered to transfer some of its stockpile of highly enriched uranium to a third country, but rejected the idea of dismantling its nuclear facilities. Now, Iran's semi-official news agency, Tasnim, says Tehran has disputed that specific report.
For more on the reaction in energy markets, let's bring in our Asia oil trading reporter, Yongchan Jin in Singapore. Yongchan, I mean, your take on what we're seeing across oil markets. We're up about 3 to 4% when it comes to Brent this time around. What's the latest?
Yeah, so in oil, definitely, what's driving the market and what's driving the traders is the report that Trump has rejected Iran's offer. Very much the trading around oil futures has been based on expectations and on the direction of the resolution of the war. One moment it's a peace deal, no peace deal. So all these kind of very conflicting signals have been very, very difficult for oil traders to kind of pass. And this weekend is just more of that. With initially there were signs that Iran has submitted a peace offer, they're willing to negotiate. Trump has said no. So it's very much a lot of conflicting expectations that oil traders are kind of having to digest. So we've seen over the past week or even longer, prices have just whipsawed up and down over these kind of shifting expectations of how the war may or may not end. And as of now, I guess what traders are saying is that it seems like we're going to have to deal with this even longer. It's definitely a negative. So for sure, prices have gone up as we've seen.
Prices on the short end, and I think your piece on the physical market has, at least for now, largely moved on from this. Can you explain to us in very, very simple English, if you could, what's happening in the physical oil market and why it doesn't seem like this one is that big of a deal compared to when we started out the war about, 10, 11 weeks back?
Yeah, so I would say there's two things that are happening. There's one, obviously, on the futures front. People are pricing in expectations of, the conflict getting worse, how long it might take to resolve the war. But actually, in the physical market, when we talk to, shippers and refiners and people handling like actual physical barrels of oil, it's a slightly more nuanced and almost paradoxical picture, sorry. And that's because a lot of the refiners, the Strait of Hormuz is still effectively closed. A lot of supply is stuck. So they're operating on very just-in-time basis. They're no longer doing as much forward procurement. That's affected benchmark pricing, which is very much tracks these longer-dated prices. There's also, of course, activity related to how refiners are procuring. They're buying their feedstock from further and further away, countries like the US, Kazakhstan. So all of that, has drawn activity kind of out of the Middle Eastern market. And so we do see a dearth of liquidity in the physical oil market in the Middle East, in the so-called Dubai market. So that's kind of why we see prices kind of easing off in the physical market. But I do want to emphasize it's not that somehow it's representative of the conflict easing or somehow traders are expecting, trade to restart. It's very much representative of, shifting behavior among the refiners and the traders handling physical supplies. And that's kind of why we see the almost, paradoxical scene where physical prices have eased off a little bit. And yet, the situation is still very much dire. Futures prices, as we were just talking about, futures are up. And so it's not like, it's not quite right to say there's a calm, but, in the physical world, there is a little bit of a pullback.
Yeah, I mean, to some extent, part of the energy market, to your point, is learning to live with the reality we're in and perhaps even, I guess in some cases, learning to figure out how they deal with it in case this becomes more prolonged. Yongchan Chen, fantastic. Thank you. Our Asia oil trading reporter there in Singapore for us, really waking up where we are right now, 4% higher on futures prices, but maybe a relative window of stability in the physical markets. Speaking of that, I think when you look at equity markets, have certainly moved on from this, right? So S&P futures are coming off lows a little bit. Nikkei is up 0.6%. The AI trade is powering the Korean markets off highs at this point already, and we are poised for a modest rally when things open up here in Greater China in a couple of minutes here. Joining us now from Singapore's Lorraine Tan, Director of Asia Equity Research at Morningstar. Lorraine, how much do you still think, of this war, and how much does it still affect your investment decisions?
It's still very much in the background. We've seen the markets sort of come back and sort of basically ignore what's going on And it's basically still our base case views that there should be a resolution by the end of the second quarter. But as we move into June, I think we get a little bit more worried that the risks are going to be prolonged. And we can't, ignore the fact that petrochemical naphtha supplies are going to be already in precarious levels. So we are going to be seeing more risk, and at this continues, I think it does weigh on global growth this year.
The market doesn't seem to feel that way, Lorraine, when I take a look at what equity markets here in this part of the world, and I think it's the whole AI trade that is buffering that. You have a call that maybe things are looking a little bit too stretched valuation-wise. How do you think this is all going to play out here the next coming months?
Yeah, so we've seen a big bounce up in tech, and basically earnings are fantastic, outlooks are very positive. So that in itself is good news. But I think in terms of valuations, when you look at where particularly the share prices of some of the memory stocks, they're really looking into prolonged super cycle of demand, and that means that demand is going to continue to exceed supply, even though capacity is going to come through starting towards the end of 2027 into 28. So the expectation is going to be prolonged through the next 5 years, which is extremely unusual for the tech space, for the chip space as a whole. So that's where we're a little bit concerned. And once there's a little bit more of a comfort in terms of supply, you will see prices come down very sharply. So that's where we think the markets are a little bit stretched. Valuation-wise, we think risks. If there are some disruptions to supply on the chip side because of shortages in raw materials somehow, that's going to have some impact in this space because valuations have moved beyond the next 3 years.
Lorraine, just to clarify, when you say prices will come sharply down when we have more clarity, did you mean memory chip prices or did you mean stock prices?
Sorry, memory chip prices. And once that does happen, you should see a pullback in share prices too.
Okay. One of your assumptions is the AI CapEx cycle, on that note, peaks out 2028. Can you just take us through that assumption? Because there are lots of moving parts and incredibly amount of just major variables involved. We don't know what the world looks like in 2028 is my point.
Yes, that's right. So I should clarify that. What I mean is that capacity supply should start to come through in 2028 into 2029. So the good news that we've seen with the recent tech space is that there is the framework for more long-term contracts coming through. So that actually provides a little bit more clarity, much more better visibility than where we were at previous cycles. It also may actually, sort of curb or basically reduce the downside, the bottoms in that sense. So all that is positive for the chip names. But I think it doesn't ignore the fact that once, the average selling prices of the chips, memory chips in particular, start to come down, you will see a pullback in that sense because growth will be impacted. So these are cyclical stocks still. So at the moment, they are trending towards the peak of the cycle. And at some stage, when capacity comes through, it takes a couple of years for that to happen. They will start to ease back and normalize and come back down towards, the bottom of the cycle at some stage over the next 5 years.
So is it just the memory side of tech that you think is stretched now, Lorraine, or do you think it's the whole tech sector? And how selective do you have to be in the space now?
Yeah, so we're not saying that there are no buying opportunities in the tech space. We'd just be pretty selective. I mean, some of the big names we still like TSMC, for example. We also actually would pivot towards some of the hardware equipment companies because they're actually seeing much better long-term visibility as well from the recent earnings outlooks. So names like Advantest, for example, is something that we also like.
Okay, Lorraine, we have China's biggest tech companies, the OGs of the world, are reporting this week. I mean, this is a group that has largely underperformed the memory names, TSMCs of the world, and also this new generation of AI plays in China. What is your assessment of, the Tencent, Alibabas of the world, and do you think these are potentially still giving you alpha opportunities, or has that both passed?
I do actually prefer these two names at this point because, as you said, they have They've lagged in performance. Obviously, they're more of a mixed story because they do have the e-commerce headwinds, and in some cases, they do have the delivery headwinds in terms of Alibaba, for example. But if you want an immediate sort of boost, I guess, in terms of where things can be monetized, I'd still pretty much prefer these couple companies. Tencent, Alibaba, we expect both to be able to particularly generate and benefit from the AI space over the long term. So I think, and they're not, reflecting the cyclical bumps up at this stage. So we still think there's long-term potential for these two names.
Okay, China Tech and some of those AI alternatives. Lorraine is giving us some good opportunities there. Lorraine Tan, thank you so much, Director of Asia Equity Research at Morningstar. Coming up, we're set to get the latest CPI print coming out of China, along with factory gate prices. We have Credit Agricole Chief China Economist Xiaojia will be with us to break down those numbers for us.
But ahead of that, we're looking at what's at stake for this upcoming summit between the two presidents after Beijing has now confirmed in the last few minutes that a U.S. president will be visiting later this week. Counting down to the open of markets in Hong Kong, in Shanghai, and in Shenzhen. 14 minutes away. This is The China Show. Good morning.
All right. That promo just showed it all, right?
Something's happening.
Something's happening this week.
Not
right?
sure.
Well, China has confirmed that in the last couple of minutes there, confirming that President Trump's visit to Beijing will happen later on this week. Let's bring in our chief North Asia correspondent, Stephen Ingle, who will be, as you saw, on the ground for the event. Everyone's asking about what deliverables can actually come out of this, just given that this Iran war has really overshadowed a lot of the dynamics, right? But what could we see in terms of outcomes?
Well, sure. I think Iran will be that giant elephant in the room on all their meetings. Will it overshadow and sort of derail the progress that the U.S. and China want? Both of these countries, obviously, are putting great importance into this very short, truncated, if you will, 2.5-day meeting. They have a lot to get through, and Donald Trump will be going. Likely, there'll be a state reception in the Great Hall of the People Thursday morning. There'll be the White House says they're going to go to the Temple of Heaven in southern Beijing, and they'll take a stroll together through that park, which I was just there a few weeks ago. In fact, we shot some footage there. I didn't have any advanced knowledge, but it was very prescient, obviously. But then there's going to be a working lunch on Friday before he flies out. So there's a lot to get through. You mentioned about some of the deliverables. Are they going to be the low-hanging fruit? Or are they going to be able to secure a lasting trade truce beyond what they sort of stamped in Busan on October 31st? And will there be this board of investment that Jamieson Greer, the U.S. Trade Representative, has talked about? So that there's a lot of common interest to get something formalized, but will it happen in a short amount of time? Keep in mind, APEC is in China this year, G20 in the U.S., so there's going to be a lot of different officials mingling around with each other. So if it doesn't happen this week, it could be drawn out over the course of the remaining months.
What about hot button topics?
Taiwan, Iran, there's a lot. I mean,
semiconductors, AI.
Absolutely. Are they going to be discussed? How in depth will they be discussed? And will there be any resolution about the most advanced chips being allowed to go to China, or the export controls on rare earths and the export controls on those advanced chips? Those are hot button issues that are probably not going to be solved, obviously, in a very short 2.5 days. But soybean purchases, so in diplomatic channels, what I've been hearing is that there's the B's and the T's. Okay. The B's are what the United States is kind of seeking out, and that is Boeing jets. That's been in the works for quite some time. That could be announced. I talked to David Perdue, the U.S. ambassador, earlier this year. He says that has been in the works. It's likely going to happen, okay? That was several months ago. Let's see if they can bring it across the line. Also, soybeans. Yeah. And beef. Those are the other B's. And then the boards of trade and boards of investment that Jamieson Greer has been talking about. For China, they're the T's, the B's and the T's. T's are technology, tariffs, Taiwan. I think Xi Jinping wants assurances from Donald Trump about well, he obviously doesn't want arms sales to Taiwan, but that is something that has gone through Congress, is possibly pending in D.C. It's something that Lai Ching-te in Taiwan is pushing for. We'll have to see whether, all goodwill goes out the window if Trump goes back to D.C. and all of a sudden the arms sales package to Taiwan is approved. So again, there are a lot of hot button issues that are not going to be resolved in 2.5 days, but they can at least be addressed.
Okay. Steve, fantastic. Stephen Engel, our Chief North Asia correspondent there. For more on this upcoming meeting this week, of course, subscribers and clients can check out, of course, our piece out today here from our equities teams in terms of the equity market overlay, the stock trader's guide to navigating this high-stakes meeting that's available on the terminal and also on Bloomberg.com. Right, 7 minutes to the opening bell. Hang Seng Index 31% to the downside. A shares are set to rally. This is the China Show.
All right, when it comes to inflation numbers coming up in just about 5 minutes' time. So PPI prices are set to spike, right? We're talking about a 1.8 print according to estimates from economists here. The pass-through to consumer prices, though, might not be as pronounced, right? You're still talking about a slowing of prices there from the previous month.
Yeah, and of course, a lot of that also has to do with the fact that you have changing patterns in terms of what's being imported and exported. That's just to say Credit Agricole will be joining us once those numbers break to really give us the nuance here and what the pass-through might look like between PPI to CPI and the latest on the trade numbers too coming through. Right, so apart from that, the 6.8 handle on onshore is one we're tracking very closely because we're very close to that level on Friday. We got very close to the level on Friday. In terms of turnover, 3 straight days of $3 trillion a piece on a daily basis. Of course, you have to discount the fact that we are coming off a holiday, given that three-day window that preceded that. So just want to watch. And going into the open today, we are looking at some declines, although on the chip space, hardware, that continues to show some gains here.
Yeah, that's going to be the one thing to watch. Of course, you have Alibaba, you have Tencent all reporting this week as well. So apart from that, you also have U.S. CPI prices. You have, of course, this Trump-Xi meeting. There's a lot on tap here. There you go. Chips are still doing pretty good here. Hua Hong Semi is leading the charge, up some 5% in the pre-market. The open is next.
Welcome back. You're watching the China Show, counting down to the open up markets here in Hong Kong and up in mainland China. Divergence, as you can see on your screens, Hang Seng weaker, A-share market stronger. Hardware is doing quite well. He had some news, of course, on Friday going into the weekend from The Information on DeepSeek aiming to raise up to 50 billion yuan. You also just rally in chip stocks, so that tailwind across semis is still quite pronounced this Monday.
Yeah, I mean, that's why you got JP Morgan when it comes to hiking their stock targets for Korea. Once again, now they're talking 9,000 is their base case when it comes to the cost peak here. That implies a 20% upside from what we saw
So we could get there by tomorrow if you think about it. I
mean, we're already seeing 4.5% gains in Seoul here this morning. So certainly that's one thing to watch here, right? This AI trade continues on for another day, despite the fact that you have the likes of the U.S. and Iran saying that they rejected this peace proposal. So oil markets are elevated, but yes, the rest of the markets are kind of moving on, right? So that certainly is one thing. But even when we talked about the physical market, there's still a bit of calm from what we saw maybe about 10 weeks ago. So perhaps that's a signal that maybe things are looking a little bit better positively in terms of risk. Here it is when it comes to onshore markets here. CSI 300, we're just above that 4,900 level here today. Shenzhen continues to be hot. We're seeing gains about 0.75%. That has been led by the likes of CATL. We're flat on that stock, but look at the chips. Given what the tailwinds that we saw from Friday and the Philly stocks index of 5% or more, we're seeing that across the region here, even in China. So we're up 1.5% for Capricorn. We do have those inflation numbers coming out here. Ooh, yes, pretty hot, Dave. For China terms, yes.
Quite punchy in a good way. Way. So I think we have 1 point. In a good way, meaning we have to wait and see what's underneath the hood. But so we have more inflation coming through. Is the initial headline 1.2% on headline inflation? That is an acceleration from the March 1%. We were expecting a slight downtick to 0.9. On wholesale prices, this coming in a full percentage point higher than the median estimate. So we're coming off 0.5%. In the prior month, the survey was for 1.8%, which was at that point, of course, the first positive read on PPI in about 4 years. This one coming in near 3% now on PPI prices.
Yeah, so there was saying that there might be a limited pass-through to consumer prices. It seems like it's a little bit more higher than we thought.
Yeah.
So that certainly is what the early indicators are starting to see, right? Where you're seeing broad increases, not just in upstream, but also midstream costs here. When you have oil prices on average jumping some 54% from a year ago, that's why you're seeing the sort of moves here that you're seeing when it comes to prices. So for more, I mean, certainly the Hong Kong markets aren't doing as well, which is interesting here, just given HS Tech, we're on offer we're down about 1/5%. We have the big tech earnings coming through here from Alibaba and then like here in just a few days or so, but Alibaba is already down some 2%. There was some news about the Qwen model being incorporated in Taobao from Reuters. That's not really helping the stock here this morning today. But HSBC stands out here. That's the lone one that seems to be out of the big caps, is slightly to the upside. But then again, so it seems like onshore markets outperforming, at least for now, in the early go of the morning.
Yeah, okay, let's get more reaction really around this hotter than expected inflation print on both fronts in mainland China for April. Joining us here in set is Xiaojia, Chief China Economist at Credit Agricole. Good morning and happy Monday. Very nice to see you. So you just learned the numbers too. So the initial reaction is what?
Definitely, I think China's reflation is happening faster than people expected, and especially on the PPI front. I think for the PPI, I think definitely the ongoing Middle East conflict and the elevated global energy prices has likely pushed up the upstream energy prices and also those industrial goods. But I think underneath, if it's happening so fast, I think these transmission of these energy prices into midstream could be also happening quite a bit faster than people expected. And beyond that, I think there are something that we should also look into. For example, the global AI boom is really, I think, is also having its impact on some of the related raw materials, equipment, machineries, and also some of the final demand prices as well. For example, if we look at yesterday's trade data, the Saturday's trade data, it already shows that China's chip export, IC export, that was doubled from a year ago. And if we look at the chip export price, actually also rose by 80%. So I think these global energy prices and the demand for AI-related materials and products, and also if we look at these anti-evolution policies that has been going on in China, that could also help to address some of the supply-demand imbalances that we have seen in the past. So I think this is quite telling of something. And of course, I think if we look at these base effect and the second quarter, third quarter last year, PPI was quite negative.
Do you expect when it comes to the export side of things that it really is going to be the renewables, the green exports that are going to be driving those overseas shipments? We saw that when it comes to EVs, solar, even in the last few weeks or so.
Yeah.
Is that what's going to keep those tailwinds going?
I think the number one contributor, the leading driver is still AI and the related tech demand. And so for example, the automatic data processor and these IC chips that had joined and contributed more than half of the headline export growth, as well as half of the imports of the related products, also is contributing half of the import growth, which was 24%. And EV, I think China exports growth in April was 44%. I think that is also quite strong. So I think these global AI-related tech trade, and also I think there will be a rising demand for China's renewables as well, because if these energy prices keep elevated and there have been more of the uncertainties related to when we are going to have the reopening of the Strait of Hormuz.
How about domestically? Are there any signs that part of this reflation is demand-driven internally?
If we look at the headline CPI, so 1.2%, I think fuel prices has definitely is a positive contribution. If we look at the fuel prices, it rose by 21% in year-on-year terms in April. So I think that contributed 0.5 percentage point. But beyond that, if we look at the core CPI inflation, of course, we need to look at details later.
Sure.
But in the first quarter, core inflation was 1.2%. Is also relatively, it has been on a mild climbing path in the past few quarters. So I think that is also showing that China's domestic demand recovery is taking place, but it is not as fast. Yeah.
You mentioned this reflation sort of trend that we're seeing, right? Whether it's PPI, CPI, exports continue to be strong. There's some even daring to say that the property market has bottomed as well. Are you seeing more, I guess, the stars aligning for this reflation story to really take effect now in China? And what could be stopping it?
So I think for property, I think there has been early green shoots, but it's more concentrated in tier 1 and the major tiered cities. I think it's still very difficult to call there will be a broadening of those property market boom beyond those number of the key cities. Property prices, I think it showed some early stabilization, but still very concentrated. I think there could be some of the improvement in the domestic sentiment regarding China's medium to long-term story becomes more constructive. And with this inflation, with these corporate earnings improving, and we see the stock market has been coming back. So there has been a little bit more willingness to spend. But I think in terms of how labor market is currently is developing is not super helpful. So I think beyond these drivers in those sectors that are more related to tech demand and then there are more related to these energy prices, we need to see a little bit more coming back for consumption to say that China is really back on the path of reflation story that is more driven by demand than supply.
Do we get additional rate cuts this year?
I think the probability is getting smaller, and I think it's getting more delayed because if we look at these global central bank policy decisions, they are clearly becomes much less dovish and more hawkish. And if you look at the ECB, look at the global Fed, and even look at these, the market pricing has changed quite rapidly over the course of last 10 weeks, right? So for China, data seems to be still doing quite okay, and reflation is taking place. And I think China, for now, if you look at these plan out and the latest Politburo statement, I think is more they are quite comfortable on developing these medium to long-term growth stories that will be more focusing on more high-quality growth and industrial development and technology innovations. So those fiscal and monetary policies will likely to be more targeted in nature. But of course, if there is a sudden external shock that is severely impacting China's data, real data, and also really resolve in terms of China's financial market, I think PBOC still have some moderate room, but I don't think it's going to be the main monetary policy tool. So I think the biggest risk will still come from external rather than internally.
It's the perfect segue to see. It seems like the data suggests that China is heading into these trade talks or summit with President Xi in some position of strength. Would you classify that? And then how do you think, what does that mean for deliverables? Do you think that we will likely to get anything from this meeting this week?
I think this latest positive signal is that Vice Premier He Lifeng is meeting with U.S. Treasury Secretary Scott Bessent in Korea, right? So I think there are definitely the senior officials from U.S. and China are working on something that hope when President Trump, when he meets President Xi in Beijing, there could be something to sign. So I think, but I think it will likely to be, the deliverables will likely more focus on trade of goods for now. I think there are things that could be delivered. For example, the China's commitment into purchase of U.S. goods, agricultural goods, energy goods, like the aircrafts, and there could be some purchase of the not so sensitive semiconductors, for example, if that is not crossing these national security red lines. And I think for the tariff truce, right? So last year in Busan, China and the U.S. had this trade truce. So I think there could be some arrangement to be made to extend the truce, and there would be, recently there have been tariff investigations under Section 301. So that would be, there could be some tariff frictions arising when these U.S. Section 122 tariffs comes due in July. So there could be tariff arrangement to be discussed as well. So, and also these rare earths and semiconductor trade, I think there are certainly, this will be an important event for U.S. and China to, potentially take further discussions and potentially make some concessions as well.
All right, Xiaojia, thank you. Xiaojia Zhi there, Chief China Economist at Credit Agricole. And as we just talked about here, it's a busy, busy week when it comes to not just this Trump-Xi summit that's happening. On Thursday, Scott Bessent in Japan and South Korea ahead of the summit to meet with He Lifeng, maybe to iron out some nascent sort of details here on what a sort of deal or anything that could come out of what happens in Beijing. So good signs pointing to that in the early parts of this week. You have U.S. CPI numbers. That's the big one here, given that it is also Powell's tenure ends this week as well. So Kevin Warsh steps into the fray. We're expecting those CPI prices to be quite punchy as well. CPI expected at 3.7%, which is the highest since 2023. What else are you watching out for, too?
I'm wondering if the Fed chair actually packs his own boxes, is my question, and whether, or do the staff come in and do the packing as they, I guess...
Well, he's not complete. He's staying on, right? I don't
know if he's staying in the same office.
We may have to switch offices and tables.
Not that that's consequential at all. But you asked me where my mind was. That's
we also got where
I was thinking. But anyway, yes, and of course inflation's coming through, as Yvonne is pointing out. Okay. Right. Well, apart from that, obviously some big earnings as well coming through. Of course, Chinese tech. So you have Tencent, Alibaba reporting this week. And speaking of Alibaba reporting, we're down about 3%. More on all the news concerning Alibaba over the weekend. This is Bloomberg. Right. The rally we're seeing today, by the way, we're no longer in the pre-market session, but you can trust the moves you're seeing on your screen. So we're looking at quite a substantial rally across hardware-related names, some of the foundries there, SMIC, and so more of the same. And this is just to say also the rest of the region's also seeing this AI rally continuing too.
AI rally, the chips certainly are once again the number one sort of pick amongst this AI trade. But then you had news of DeepSeek, according to some reports about that valuation, and then there's also this Alibaba news from Reuters to integrate Qwen with Taobao. The stock, though, is down some 3% ahead of course, the earnings that come out this week. Let's bring in our China correspondent, Min Lo, and all the news revolving around Alibaba here. The plans to integrate Qwen into Taobao. Tell us a bit more about what we're hearing so far.
Yeah, I'm actually really excited about this because I think Alibaba is absolutely the market leader, and they are now going to create the #1 large-scale agentic AI shopper because they're going to integrate Qwen with Taobao. And this is an extremely complex undertaking because there are 4 billion plus product listings on Taobao. They have to index it and sort of integrate it with Qwen. It's a huge amount of parameters and make that queryable with natural language. And so you can now get not just product recommendations, but the AI agent can then shop for you, make the purchase for you. It can even handle post-purchase services like returns and refunds. So they have to integrate it across not just Taobao, but to their logistics platform, Cainiao, to Alipay for payment as well. So it's an end-to-end system. And just this morning, our colleague Anthony Stevens, he was asking me to look for a product for him on Taobao.
Which was what?
Something related to that. What's that Chinese film that was?
Pursuit of Jade. Yes,
yeah, he wanted a hat from that. But I mean, in the future, you can just ask Qwen to do it for you. And imagine what this opens up for the millions of non-Chinese speaking users, especially in Southeast Asia, who are increasingly interested in using e-commerce platforms. So this is quite an important game changer, and no other company is doing that in the scale that Alibaba is.
And it avoids all the time that I get into these like Taobao rabbit holes.
Yeah.
Where I just start looking at all different sorts of tangents of things, but I was just looking for maybe like a pencil.
Or,
It's maybe part of their sort of algorithm to get you hooked on the system and spend more time on it.
It's kind of dangerous, though, when it does end-to-end for you. It's almost like you don't have to shop anymore. It's like I simply have to conceptualize me looking at things. You know how your phone listens and then stuff comes up? It's almost this, and then it's been delivered, the next thing you know. Talk to us about DeepSeek. And the story out of the information.
Yeah, so DeepSeek is now looking to raise its first round of external funding up to 50 billion yuan, according to the information. And according to the information as well, Liang Wenfeng, the CEO, is looking to invest about 20%, so about 40%, 20 billion yuan personally. And according to the SEMP, the other investors are mainly state-backed investors, as well as Hill House, for example, the global investment firm. Tencent could be interested as well. So clearly a lot of interest in what is seen as the national AI champion here. And of course, this comes soon after the company has unveiled its V4 model, and that had really sparked a race among these chip makers in China to try to adapt their platforms and make it fully compatible with DeepSeek. And Huawei is one of the first to announce that their Ascend chip platform is now fully adaptable to DeepSeek. And according to the information, DeepSeek is going to provide another upgrade as soon as June, an upgraded version, the 4.1 version that can then process audio and visual, although it can only generate text output still.
Okay, Min, thank you so much. Min Lo, our China correspondent there. As we were just mentioning, a lot of big companies are coming up with earnings this week. Next few days, of course, Alibaba, Tencent, SoftBank, all reporting this week for just a cross-section of these big companies reporting.
Yeah, it's a little bit of everything, but really, can we see a bit more in terms of this catch-up when it comes to China tech here? We had Morningstar Lorraine early this morning saying, look, they should actually be rallying on the back of AI cost reductions, improving monetization, but they're just not quite compared to what we're seeing in Korea and Taiwan right now. We got plenty more coming up. This is Bloomberg. All right, just going to recap those inflation numbers that we got out of China just a few moments ago. So the PPI prices actually was better than expected by about 1 percentage point. So certainly it was a pretty punchy number when it comes to factory gate prices as well. So 2.8%, 1.2% for the consumer price index there, also beating the median estimate as well, Dave. And certainly, when it came to the core CPI as well, that also came in slightly stronger than the previous month of 1.2%.
Yeah, and, the point that our guest earlier just made is that we are seeing a lot of this come through in the form of supply shock, but there is also an underlying demand, signs of underlying demand starting to also pick up, which is why I think you put those two things together. This reflation story is really quite an opportune time, to your point, right? Ahead of this big meeting this week.
Yeah, and you know, as Credit Agricole's judge said, like it really is, you know, not just the inflation numbers, export numbers, which continue to show it's tech exports, it's
chip
AI
exports,
related, chip exports, green exports that continue this whole export machine out of China here as well. Something that we have to look ahead to, of course, as there still remains a lot of uncertainty in this Iran war.
Okay, let's talk about the hantavirus here and some of the sort of diagnostic names, some of the effectively almost a flashback of, and hopefully it doesn't get to that point. A lot of people are hoping it doesn't, and there's no indication it will. Some of the names that we were looking at as the pandemic was kicking off 5-6 years ago now. A lot of these names are actually rallying quite substantially. This is a continuation, by the way, of a move we saw already late last week on the back of this story here.
Yeah, it certainly is a concerning story when you read what happens, of course, on these cruise ships. So certainly that continues to be one thing to watch as well. When it comes to the benchmarks here today, it seems like it is onshore over Hong Kong here today. But yeah, overall has been quite quiet. You are seeing yields, though, in the back end of the curve, higher on that inflation print. Welcome back to the China Show. Here's a look at the CSI 300, a half hour into the session. Sunny skies in Shanghai. We are seeing a pretty bright sort of start to the week here when it comes to the CSI 300. We're up about 0.6%. Those inflation numbers quite positive and quite punchy too. PPI prices had a 2 handle on it. So certainly that is one thing about this reflation story that continues to kick on here. Hong Kong not doing as well. Maybe everyone's still recovering from high rocks maybe over the weekend, Dave.
Yeah, mini muscle.
Hangover there maybe. The high rocks hangover. That's a thing.
It was, it completely
dominated your Instagram?
My Instagram feed. I was actually, and you know, we were talking about this early on. You know, I wasn't going to say this.
You wouldn't want to talk about it.
But, you know, I was telling you, I had to reset my phone over the weekend, right? So I didn't have a phone for 12 hours, which was heaven, given all the garbage that was coming through on the weekend.
My favorite part about the Hong Kong high rocks, I got to say, was the dim sum carts that they were pushing. Did you see that?
Yes. 30 kgs, I believe.
Which I heard was actually quite heavy. But yeah, it just goes to show. Dim sum ladies, they got some muscles, man, I got to say.
Yeah, I heard it was the biggest, too. If someone's going to correct me, it's the biggest in Asia.
Biggest in Asia. I mean, they had to do it over 3 days, right?
Yeah.
So chances are you knew someone that did it. And congrats everyone that took part.
Congratulations.
And of course, and all of the mothers out there. I hope you had a good Mother's Day as well.
Yes, of course. Forgot about that, too. Now I forget about the news. What are we talking about today? Inflation.
Yeah.
The ceasefire isn't happening, although I think Iran is disputing the journal report on the reasons
why
Donald Trump was disappointed with the response to that proposal. And then you have these big earnings. But again, like all of these things, we can talk about all of these things. But the chip rally is just offsetting. In fact, just 2 stocks are offsetting everything else we talked about. Just this crazy rally.
Look at that.
Look at that.
SK Hynix is up 12%. Samsung's up 7%.
Yeah.
The rest of the market is actually lower in Korea, right? But it's really kind of bringing up all these chip names up, right? Look at Hua Hong Semi. There's a huge dispersion that you're seeing across some of these Chinese sort of plays here, from the semiconductors to even just like the producers. So certainly, it's going to be, I don't know, does that bode well for Alibaba this week, just given the fact that they have earnings coming out, Tencent as well? They're really not participating as of it. But even TSMC, it's interesting, right? They're starting to see some rotation of the big names in Taiwan, maybe to those alternatives, like Morningstar said, right? That media tech story continues on too.
Yeah, so she, like Lorraine Tan, likes MediaTek.
Advantest in Japan.
Advantest, and to the point you're making on Alibaba and Tencent, those are her 2 preferred names, of course, because they have underperformed the broader rally, right? So it's something to watch, of course, going into the thick of things as well. I mean, mentioning the Kospi index, we're at 8,000 now, so I think it was JP Morgan that hiked their own target. I think it's 9,000.
9,000, yeah.
I mean, we could get there by lunchtime, really looking at the pace. That's an exaggeration, of course, but if someone had told you the Kospi was 8,000 this time last year, they would have called you crazy and just thrown you out the door. But here we are folks. This is happening despite oil prices acting up again today on the back of the other story we're tracking, which is, of course, Iran. And we have now a line crossing on Alibaba. Let me just mention, of course, oil is up. Oil prices are up 4% right now.
Yeah, so that certainly is interesting, right?
Interesting, this one.
When oil prices are moving up, the tech trade continues on for another day, right? So, and you started to see more lines crossing through, not just on the chip space, but Alibaba, the news from Reuters, talking about how they're going to be integrating the Qwen AI model to their Taobao. We have, in just the last few seconds, the company has confirmed that. So they've opened all of Taobao to Qwen AI. Oh.
Ushering in.
Start shopping now, guys, and see what changes are bringing about. It should be easier, right? When someone can help you out with shopping on Taobao.
Probably less time for you because you find yourself.
I gotta say, shopping on Taobao is overwhelming for me because there's just so many things that you can. And once you find one thing, then they recommend something else, and then you're up at midnight still looking at things in your cart.
Looks like you need to find your new agentic shopper.
Qwen is going to be my friend. I'm going to say that. All right. Okay. Trend is also our friend.
Yes.
Let's bring in, of course, David Savage of MLive. He's our market strategist and talks us through what's going on. You're still tracking what's going on in Korea, and it's been very interesting, right? Where these two stocks continue to drive the Kospi higher.
Relentless, right? Is what you said. We were just talking that we were looking at the index. Most of the index is down today, right? Despite the massive jump today, and as you said, it's two stocks for now. But that's really the story we're seeing globally, and we're seeing certainly in Asia, right? So MSCI Asia Pacific Index is up, and again on the fundamentals, it's very strong, right? So aggregate earnings growth for this quarter is running at 34%, but technology is the vast majority of that. It's well over 160% year over year. And again, sort of the AI adjacent names, sort of in the industrial space and materials, are also really strong. So we're increasingly getting concentrated in a single theme in a very small handful of stocks, and that's a risk. But concentration is not necessarily a catalyst for a reversal, and I think that's I think the market's going to need something more sufficient than to just continue to see more concentration to see this rally really reverse.
I mean, we're getting more from the sell side too. You probably heard you saw the JP Morgan call on 8,000. 9,000, I think. And I think we're also flashing the, can we flash?
Bring it back.
Did we just flash the market breadth chart? I want to look at that too. Well, how long can it continue, I guess, is the question for now. I'm assuming it will, is the point, looking at sell-side projections here.
Yeah, I think it's an equation right now of two elements, earnings and then the sort of geopolitical tail risk, right? So we saw again today, oil is up, which is certainly negative for most of the benchmark, and we're seeing that if we look at consumer names. But it's not enough yet to disrupt the tech trade because it remains contained, right? As long as I think the market assumes that some of these negative headlines are negotiating tactics, it can move the price of oil. It can certainly be a headwind for some other parts of the benchmark, but it's not enough to reverse the tech rally. And then in earnings, it just keeps getting ratcheted up higher and higher in terms of expectations. But so far, we've just seen most of these tech names continue to beat those earnings, and we see it ratchet up further. So if we see a crack there, that could potentially reverse things. But it's a high bar.
When things are interesting, when the numbers get so stretched in Korea because of all the zeros that are there in terms of stock prices and price moves. David, it's a big week, as we say, when it comes to not just you have U.S. inflation numbers coming out earlier this part of the week, and then you have the Trump-Xi summit. What do you think is going to matter to markets more? Also, Alibaba earnings to throw it into the fray, too. Yeah, earnings are certainly still a feature. I think, interestingly, Alibaba, Tencent earnings and the Trump-Xi summit is interesting. We saw actually on Friday some big flows into some U.S.-listed China tech ETFs. But again, I think that we've certainly seen it in Asia, like the divergence between consumer tech, consumer names versus, the hardware players, China semi names or the optical trade is very stark. So either we'll start to see perhaps some convergence there if we start to see, the housing market, bottom a bit and we see some, better consumption numbers, perhaps we see those consumer names start to catch up because, the valuations look very attractive.
But for now, again, I think the trend is your friend, and I think that's probably will continue to see the hardware names outperform.
And how's your team looking at Iran and the latest there today?
Well, I think it's the context where as long as it's contained in a range, we'll continue to see some assets reflect that if it's consumer names or certainly on the bond side, FX side. But on the equity side, we're being really driven by the tech trade, and it's a 3% move in the oil price is at this point not sufficient to reverse the rally.
Yeah. Which is it's just crazy to even think about.
David, it's not moving the needle at all.
No, 3% gains on oil. All right, thank you so much, David, our MLive market strategist, joining us here to talk through some of the price action here this morning, what to watch out for this week. Coming up, China confirms President Trump will be in Beijing this week for a summit with Xi Jinping. We'll be looking at what's at stake for the first U.S. presidential trip to China in nearly a decade. This is Bloomberg. All right, we got a whole team. As you saw, they're heading to Beijing the next few days as well. Now that China has confirmed that President Trump's visit to Beijing will happen later on from the 13th to 15th of this week. Let's bring in our chief North Asia correspondent, Steve Engel, who will be on the ground for the event. And of course, everyone wants to know what's going to be reasonable in terms of what could come out.
Yeah, so what are the deliverables, to use State Department parlance? That's a difficult question to answer because there's a whole laundry list for these two sides to get through. Keep in mind, it was all the way back in October when you and I were there in Busan, South Korea, when the last time they met and they sort of solidified a truce. But again, there's still lots of distrust between the two sides, and there are a lot of issues still to be resolved. They're not going to be resolved in 2.5 days. It'll seem like 2.5 hours, I know, in Beijing. Coming up later this week. But again, complicating the to-do list or the must-haves is going to be the war in Iran, obviously. Trump is going to be pressing Xi, obviously, for answers, if not cooperation, and also highlighting some of the issues that the U.S. side has with Beijing's support of Iran. Now, whether that's through financial support, military support, we don't know if that's happening or not, and just support in opening up the Straits of Hormuz. That's what Beijing has been talking about. Wang Yi has been talking about. The Straits of Hormuz must be open. So there could be some conflicting narratives coming from the two sides. And one thing in this report I'm just going to toss to you right now is they haven't had a lot of time to put together the agenda for these talks. So it could sort of spiral out of control where the war in Iran dominates everything, and then the deliverables are left in the last minutes. Here's a preview.
State visits to China of this magnitude usually take months of preparation, countless hours of back-channel horse trading, and optics planned to the most precise detail. By many accounts, that hasn't happened ahead of this summit, especially with Washington's attention squarely on the war with Iran. There's palpable concern here in Beijing that this two-day affair could be splashed with far too much spontaneity for China's liking.
They want no risk, they want a no-thrills summit, and they want deliverables on both sides clearly defined. How do you do that with an administration that is not engaging in the traditional way that U.S. administrations have engaged their counterparts in China?
Is there a clear China policy, do you think, in the White House?
No, I don't think there is.
The issues are endless. Front and center could be the war in Iran.
Iran is the world's largest state sponsor of terrorism, and anyone who's buying oil from Iran is contributing to that. We're looking for stability with China. We don't want this to be something that derails the broader relationship or any agreements that might come out of our meeting in Beijing.
Also, will the two leaders solidify a more lasting trade agreement? Boeing airplanes, soybeans, rare earths, perhaps even the most advanced AI chips could all be up for discussion.
The fact that the U.S. is hosting G20 and China is hosting APEC, which means their ministers are running around in each other's big cities all year long, and the two leaders will meet in these multilateral environments, is also very positive.
But is Taiwan on the table? Xi may want certain assurances from Trump with an arms package to the island pending in D.C. The two sides may end up playing it safe, announcing easier deliverables like better people-to-people exchanges or even visa-free travel. A long shot for sure, but China has implemented that with many more countries of late as a diplomatic outreach and a way to boost a sluggish economy.
As far as the services sector goes, there's absolutely no question at all that the domestic tourism market is absolutely booming.
Keep in mind, this summit is on China's turf, begging the question, has the Trump White House readied its most effective away game plan?
They're putting a lot of stock on the personal diplomacy between President Trump and President Xi. It's not a long-term strategy. It's a short-term strategy.
And a little forethought on our part there. We're shooting at Tiantan, the Temple of Heaven, about last month when we were doing this preview package. That's where they're going to be on Thursday afternoon. They're going to take a stroll, Xi and Trump, through the Temple of Heaven after a state meeting at the Great Hall of the People, we expect, on Thursday morning, and then a working lunch on Friday before he jets off. So there's not much time.
We're hearing... Well, a two-part question. We're hearing these sanctions on Chinese satellite imagery companies, and is that part of the broader posturing we're seeing from both sides ahead of these talks, too?
Well, clearly the Trump administration is concerned by China's support of its ally Tehran, whether that's, as we heard from Jameson Greer talking about the purchases of Iranian oil. China buys almost all of Iran's oil, and a lot of that is not necessarily going through the Strait of Hormuz right now. But this sanctions is added to the entity list. We're hearing in the United States is added 3 satellite imagery companies from China. Again, one of the concerns that the U.S. side has is that China is providing these companies, Mi Entropy Technology, the Earth Eye, and also Changguang Satellite Technology. They've been providing satellite imagery, which it's an industry and a sector which has boomed with all the LEO satellites, the low Earth orbit satellites, and all the like, providing that to the Iranians that they've been able to use for their military purposes to strike U.S. assets across the Middle East. So that's another very contentious issue. There's also something which I think we need to take into consideration as well going forward, and that is the data that Bloomberg has seen. Because the Strait of Hormuz there's a blockade, and the oil export, I think it's Karg Island there in the Persian Gulf, is blockaded by the U.S., we're seeing an exponential increase in the amount of rail travel from the data we have is from Xi'an in central China through Kazakhstan, Turkmenistan to Tehran. That has risen quite considerably. It's one-way traffic right now. China's sending industrial and commercial goods to Iran, but the Iranian exports from China to Iran, because Iran is cut off in many ways. But the Iranian officials are saying it could go the other way as well with petrochemicals or fuel exports to China.
Fantastic. Steve, big week for the team here. Stephen Engel, of course, is headed to Beijing to help cover those stocks for us. Right. Now, as far as the markets go, investors will be looking for signs here of these easing tensions between the two presidents when they meet, the tone, the texture, how they say it, the different versions and words they use in their separate communiques. So how do we look at this from an opportunity standpoint for investors here? Jeannie Yu, our Asia Stocks reporter, has this trader's guide, of course, to help us navigate these talks ongoing this week. Jeannie, so where do we start? What are we looking at here?
When we talk to investors, many of them kept saying, they're not expecting a lot of concrete measures to be announced. But on the other hand, it's a good signal first overall for the market, kind of easing the political tensions between U.S. and China. On the other hand, there are some deals to be made. For example, I think one of the key focus during this summit is the rare earth. So Trump obviously he is expected to secure the rare earth supply from China during this summit. So for rare earth players, some of their shares have already more than doubled in the past year. But this could be an extra good news for them if there's any anything to be announced. The other thing I think is the tariff obviously is one of the key focuses. Right now, the effective rate on China is about 22%. The consensus when we are talking to people, they're saying, they're not expecting, this rate to be, lower or something. But they do expect that the tones on the tariff could be eased, and which could be a good news for the exporters, especially the ones that have very big sales exposure to the U.S. The other thing,
tech curbs.
Yes, tech. I think one of the key focus people are talking about tech is like, before this summit, we've seen a lot of headlines, kind of like escalating tensions between U.S. and China. On one hand, like China doesn't want this key technology to be exposed, so they're blocking the MENA's deal. On the other hand, like U.S., they're trying to block some exports to China, especially the chip for the Huahong semiconductor. Some of the news, I think there are a lot of tensions in the market already. Right. But one of the things some analysts are saying, like actually there could be some relaxation. For example, some WFE equipment, which is the wafer equipment, which is some tools used to make advanced chips. That could be one of the areas to be relaxed during the summit, which actually could be a good news for the tech sectors. Because people are already too concerned about the tensions already. So this could be like kind of like a to be sure for them. And then the other thing I think is that I think people may increasingly realize that the tensions between China and U.S. in the long term in the tech wars are not going to be eased, very fundamentally going forward. So I think this summit will make people rethink about their positioning in the, especially in the domestic hardware names in China, because obviously China needs their semiconductor independence to achieve, their ambitions in the AI development. So I think this summit could be, could be a good news for the domestic supply chain names as well.
Okay. It does. Perhaps it's not as big of a non-event as
nothing burger, as
some people say. All right, Jeannie, thank you.
Fantastic.
Jeannie, you there, our Asia Stocks reporter. By the way, you can check out Jeannie's piece today, The Stock Trader's Guide to Navigating These High-Stakes Talks coming through this week, which have been confirmed about an hour back here by the Chinese side, happening in a few days or so. That's available on the terminal and also on Bloomberg.com.
Here are some big corporate headlines we're tracking for you today. China Wanko says it has won near unanimous approval from creditors to restructure a yuan bond repayment. Now, investors backed changes to the principal and interest repayment terms on its 2023 second phase medium-term note. Under the revised plan, eligible holders will receive a fixed payment of $14,700 per account, as well as 40% of the outstanding principal at the original maturity date. Now, shares of Intel closed higher in the U.S. on Friday after a report that the company reached a preliminary agreement with Apple to manufacture some of the chips in its devices. That's according to the Wall Street Journal, which said talks have been underway for over a year, but they say it's still unclear which Apple products would use the Intel-made chips. Saudi Aramco CEO is warning of a long disruption to oil markets following the near closure of the Strait of Hormuz. This comes despite the company reporting a jump in profit after higher oil prices and demonstrating its ability to redirect exports through alternative pipelines. The CEO anticipates that the oil market will only normalize in 2027 if trade and shipping remain curtailed for a few more weeks.
All right, let's have a look at some of the big movers, and this is a really massive plunge in CSL. That's, of course, the biotech company in Oz. Let's call it 20%, 18% down there. That should be the most on record. So you have this turnaround plan that management has put in place, and it does seem, number one, with the cuts in the full-year outlook, and also perhaps part of that story is an additional $5 billion in additional impairments there. Effectively might mean the turnaround plan will take a lot more time to effectively see a turnaround. So we'll see what happens with that. We're down 18% there. Sony and TSMC. So there's an earnings story, there's a buyback story, and then there's this tie-up with TSMC and this partnering in an effort to rein in chip-making expenses. That's playing out for Sony in a very nice way, up 9%. TSMC's down today, and very quickly Nintendo is down in Tokyo today. That's also on the back of these earnings.
I mean, they certainly have been exposed to this memory squeeze as well. So when it came to the outlook, that led to the shares to plunge in Tokyo. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are going to lunch break in just a moment. And yeah, you're seeing when it comes to Nikkei, now we're seeing a little bit of downside here, about 1/3 of 1%. We're flat on the topics here. Some weakness that's crossing for the yen at 157 levels. But interesting to keep in mind, of course, Scott Bessent is also going to be heading to I think Japan and Korea in the next few days here to meet with, of course, some of the Chinese counterparts. So a lot could be happening over there. But yeah, it's interesting how Japan is taking a little bit of a backseat to what we're seeing in Korea today here once again. Take a look at your Asia dashboard, and this is what we're seeing here. We're seeing MXAP up about 0.6%. That's really been driven the likes of the Kospi. When it comes to U.S. futures, we're still slightly in negative territory here, but largely speaking, we have kind of shook off some of the Iran sort of headlines here this morning. The dollar is slightly bid up here today, but yes, a pretty mixed picture across the board.
It really is. I think I'm just looking underneath the hood in terms of Asia, right? So I think you have a very, very small majority. So most stocks are actually up, but it's still a sizable minority of about, calling about, 40% of stocks that are actually down. So market breadth isn't that good. I mean, nothing turns me off, but worse than bad breath, if you think about it. No other meaning intended, but the part that some of it becomes misleading when you look at the benchmark and you have bad breath and you write a bad headline and your editor gives you a headache for it. But anyway, that's just to say, it's the details matter, right, folks? Okay, inflation actually came through about an hour back, and this one actually surprised substantially to the upside on both. So actually, CPI out of China and PPI for April actually coming in quite substantially higher, fastest pace since 2022 on factory gate prices, as the war pushed up costs for companies, and you have cheaper food, though keeping consumer inflation largely in check. Here's the analysis here that we talked with Credit Agricole early on, and their initial take was this.
Definitely, I think China's reflation is happening faster than people expected, and especially on the PPI front. I think for the PPI, I think definitely the ongoing Middle East conflict and the elevated global energy prices has likely pushed up the upstream energy prices and also those industrial goods.
Okay, let's get more analysis now from David Chu, our out of our Bloomberg Economics team, of course, here. So can we start with inflation data, David? Then we talk about trade?
Yeah, sure.
Okay, well, if you're going to say no, I'm still going to ask it. No, I'm kidding. Well, why don't we start with inflation? So how much of this is supply shock? How much of this is demand-driven?
Well, we cannot tell, quantitatively how much from the from the supply side, but we can say that it is mainly from the supply side, especially from the oil prices. And actually, this time is something like 10 years ago, when China started the supply side reform, and we saw the PPI surge sharply. But on the other hand, the CPI inflation was not so strong. At that time, it was not because of the external shocks, but it was because of internal reforms. But still, it's the same. It is from the supply side shocks.
Let's talk about the trade numbers, too, which were very strong. What do you think drove that number?
I think two reasons behind that. One, the ceasefire, and also the improvement in the sentiment helped the export, and also the rollback of the U.S. tariffs also contributed to the surge, to the strong number in export. Because if you look at China's shipment to the U.S., it rose in April. I think that wasn't the reason. And another reason that if you look at the industries, you would find that it was mainly the electronics product that contributed a lot of the export. Well, it's easy to understand if you look at the stock index in Korea, right?
So these are down to, so when you say tech exports, are we talking more chip equipment? Are we talking, I mean, it can also mean EV exports, for example. People want to get a sense of what China is exporting these days.
Well,
exporting
both.
more of.
I think both.
Okay.
But if you say, if we can only choose one, it is the AI-related products such as chips and also other components and parts for AI.
All right, David, thank you, David Chu there from Bloomberg Economics, of course. And given just those prints that we got for PPI and CPI, it's interesting to note the GDP deflator in China has basically snapped out of negative territory the first time in 12 quarters. So, yes, more signs pointing to, of course, reflation, and brings us to kind of where China stands and what position they're going to be coming into these Trump and Xi talks that are happening later on this Thursday. There's a lot on tap here in terms of your event risk today or this week, whether it is, of course, that summit that China has confirmed that's going to be happening later on. You got Scott Bessent's going to be heading to Japan, heading to Korea as well. Maybe possibly to start ironing out some of those details here to maybe set us up for what could happen out of Beijing. The key one to watch is U.S. CPI prices. We're expecting a pretty punchy and hot number there coming through the U.S. as well, as we start to see Kevin Warsh take the reins here as Fed chair, with Powell stepping down. His tenure ends this week as well. So, yeah, plenty of on tap here, of course. Don't forget, we got big earnings to tell you about, too.
Yes. So you have SoftBank is set to report, and then you have the big platform and tech companies and airlines, of course. Singapore Air is also coming out as well. So a very, very nice cross-section of some very relatively large caps in their respective markets. And really, I guess, as a note on the AI story and sort of Tencent and Alibaba and why the Chinex index has underperformed the Chinex index has outperformed, rather, the Hang Seng Tech Index. This is very, very clear, right? In terms of earnings revisions, the Chinex index, a lot of that is CATL and some of the others there. It's very clear. Positive earnings revisions are dominant in the Chinex index. They're not so much in the Hang Seng Tech Index. And they're going the opposite way. This is year-to-date normalized on both here. So.
Yeah, when you talk about China tech and the large caps, right, it's not the pure play of AI that people are hoping for. And you have to deal with things like e-commerce and involution and price wars and the like. And maybe that's why you're not seeing those revisions to the upside. But, yes, there's a lot on tap when it comes to the tech side of things. Let's talk about what could really lead to that next leg up in equities, with many now turning to this part of the world. That's as we start to see South Korea, Taiwan have rallied the most in the world this month. For more, let's bring in Charlotte Yang, our Asia equities reporter. She joins us now. We talk about the relentless rallies that we're seeing in Korea and Taiwan right now. How are Wall Street strategists now looking at the best way to chase this trade?
Yeah, so they're still saying that Korea and Taiwan is a place to be if you want to play the next leg up for the global AI trade. I mean, that's the message we're getting from the derivative strategists. So the setup is not easy. Like you mentioned, they've rallied so much. Kospi is up around 85% this year. And, TAIEX is also, up so much. And also one very unusual signal we're seeing in the options market is that you have implied volatility rising just as the spot market is. So I think that shows sort of a signal of both euphoria as well as anxiety, given there's a very crowded positioning for traders chasing those rally. But with that said, so there are some strategies to play around. For example, JP Morgan is recommending you to buy worst of cost or cost spreads for the TAIEX index, Kospi or Nikkei. And the reason for that is that they see, hardware essentially is still the earnings backbone for the global AI boom. And for TAIEX, for example, they see is the most efficient expression via index. And for Korea, Samsung Securities is recommending you to do some long gamma strategies near term, or like a short gamma in the next 3 months, just tied to sort of like calling a peak volatility. So there are different ways for you to play on the derivative side.
As long as things keep going up, I think is the underlying assumption. JP Morgan thinks things will keep going up in Korea. What's the new call?
Yeah, so JP Morgan has just raised over the weekend their bull and bear case for Kospi. They're now calling 10,000 for Kospi in a bull case and 9,000 level for Kospi in a base case. And this is following Goldman Sachs, who has also just raised their target for Kospi to 9,000. And I think the common ground here is that they still see the earnings going so strong. And for the next 2 years, we could keep seeing a memory up cycle that's boosted, by very favorable pricing dynamics, and also how these remain the bottlenecks for the global AI story. And JP Morgan did say that, near term we could see technical, signals already, raised, saying that the rally is going pretty fast. You have the relative strength index already overbought, and market breadth is narrowing. But with that said, you could see some consolidation. But they still think that investors should stay positioned because of that longer term earnings story there.
Charlotte, thank you so much. Charlotte Yang there, our Asia equities reporter. I mean, certainly this has been a market that has defied technical signals of selling, right? It's remained overbought for the, last 12 months.
Yeah, year basically. Yeah.
I've started looking at that specific chart as a signal. Anyway, in the next hour, it's going to be interesting here because Standard Chartered's coming on Bloomberg Television, the Global Chief Investment Officer, Steve Bryce. So about, I would say, less than a week back, on May 6th, he posted on LinkedIn. Shortly after that, they put out their full call that they've actually exited that overweight call on outperformers, Asia ex-Japan, Asia effectively, and also semiconductors. So effectively, since that call, Korea's up, let's call it 9-10%. So Steve has some explaining to do. We'll see what he says there, of course. Lots more ahead. This is Bloomberg. I look at Aussie markets right now, 0.5% to the downsides. Interesting, the conversations recently there around how much further the tightening cycle can go. And of course, on the back of that, and separate to that, of course, this separate rally we're seeing in metals like iron ore. Obviously, this week is a new one, so we'll see whether those two stories continue to show themselves in these markets. Now, on the Australia story, the Treasurer, Jim Chalmers, says the upcoming budget will actually aim to address soaring home prices and help people enter the housing market. Speaking to Bloomberg in Canberra, Jim Chalmers also says a key focus will be containing substantial inflation supercharged by the war in Iran.
This is a really responsible budget. It's about resilience and it's about reform. It's about getting people through a difficult period because of the war in the Middle East at the same time as we meet our obligations to future generations at the same time. So a big focus on fuel security, cost of living and housing, but also a reform package in tax, productivity and also making the budget more sustainable.
And the budget must look quite different to what you would have been planning in February before the attack on Iran. You've now announced, as you said, billions of dollars of spending for fuel supplies. What else did you have to change and what did you have to remove from the budget to get that money and to be able to make those savings?
One of the things I'm proudest of is that we've been able to maintain the effort on economic reform. The productivity package is substantial. The tax reform package also substantial. And the budget has more than the usual amount of budget repair as well, $64 billion in savings in the budget. And so we've been able to focus on the particular pressures and developments coming at us from a war in the Middle East. Obviously those are the new bits, but we've also been able to maintain the pace and maintain the ambition when it comes to economic reform.
Have you been forced to take that stance and to cut spending more than you wanted to because of what happened in Iran with the attack by the US?
We had some inflationary pressures before the war in the Middle East, but the war has made them much more substantial. And that's why we will be forecasting an increase in inflation. a bit like the Reserve Bank has been forecasting. So the inflationary challenges are serious. They are a big focus of the budget. $64 billion in gross savings is much more than the usual amount of savings in an Australian budget. We will also be banking every dollar of the upward revision to revenue, but in some years the revision to revenue is down. So all of this means that there's more than the usual amount of pressure on our economy, on our budget. Inflationary pressures, fiscal constraints, we're taking all of that very seriously.
And later this week, President Trump is scheduled to go to Beijing to meet with President Xi. I realize you've got a busy week ahead of you as well, but have you sort of paid any attention to that? And what is your expectation for what might benefit Australia from that meeting?
Australia is not immune from all of the developments and pressures playing out around the world. We're better placed than most of our peers. We're well prepared for what we think will be a long tail, even when the war in the Middle East ends. And so there's more than the usual amount of churn and change in the world right now. We are to some extent hostage to decisions taken in Washington or Beijing or Tehran. But what we can show in this, we demonstrate in this budget, is we've got a lot going for us, even though we've got a lot coming at us from around the world. We monitor all of these developments very closely.
And on productivity, it's now the lowest it's been in decades. And you spoke about the productivity, policies that you're going to have coming into the budget, mostly on the tax side. Is that enough to really turn around the story of productivity in Australia? And what more can your government do to help to try and change that?
Well, like a lot of countries, Australia's had a productivity challenge in our economy for decades now, not just the last couple of years, but the last couple of decades. In fact, in our productivity numbers over the last year, we saw productivity at about 1% growth, which is better than the 20-year average, and we saw market productivity up at about 1.5%. It's gone up for a number of quarters now. So those are welcome developments, but we don't get carried away with that because we've got this long-standing challenge which has been entrenched in our economy for a long time. And so the productivity package is actually a very, very substantial part of the budget on Tuesday night, not just in tax, but in other areas as well. It's all about making Australia a more attractive investment destination, getting compliance costs down, making it easier and faster to build in our economy, whether it be housing or energy projects. Just today, we've announced another $2 billion investment in the infrastructure that we need to get 65,000 more homes built to get projects over the line. A big emphasis on housing in the budget, particularly on supply. And so all of this is about trying to make our economy more productive, more dynamic, recognising we've got a long-standing challenge. We won't fix it overnight, but we can shift the needle over time by acting on a range of fronts simultaneously.
The Australian Treasurer Jim Chalmers there speaking to our James Mager in Canberra. Now to some of the other stories that we're tracking for you around the world. Indian Prime Minister Narendra Modi has urged citizens to curb fuel use as rising oil prices strain the economy and push the rupee to record lows. Modi has suggested measures such as working from home and online meetings to conserve energy and urged citizens to avoid unnecessary overseas travel. The government is rolling out credit guarantees for businesses and airlines, drawing on its pandemic response playbook. Repatriation flights for passengers aboard the MV Hondias cruise ship following a deadly hantavirus outbreak are underway. Flights have departed for Spain, France, Canada, and the Netherlands, with more scheduled to Turkey, the UK, Ireland, and the US. The World Health Organization recommends passengers return home and undergo monitoring for 42 days due to the virus incubation period. And we have been checking some of these hantavirus-related stocks here in the region. We take a look at diagnostics or protective stocks. Those have been going up mostly today. And of course, you can rewatch any of our segments on the Bloomberg Video Hub. Subscribers can explore live streaming, news, and interviews on all of our Bloomberg TV shows, documentaries, reporter analysis, and more. Check it out at bloomberg.com/videos.
Basically, earnings are fantastic, outlooks are very positive. So that in itself is good news. But I think in terms of valuations, when you look at where particularly, the share prices of some of the memory stocks, they're really looking into prolonged super cycle of demand. And that means that demand is going to continue to exceed supply, even though capacity is going to come through starting towards the end of 2027 into 28. So the expectation is going to be prolonged through the next 5 years.
Lorraine Tan there from Morningstar, Director of Asia Equity Research, where she also said, when it comes to this whole tech trade, valuations are looking a bit stretched here right now, and that, any sort of signs that capacity and the like start to be, that supply constraints to loosen up, whether it's, Strait of Hormuz reopens or whatnot, could lead to a dramatic drop in all the share prices, as well as when it comes to memory chip prices as well.
Everyone's extremely attuned to looking out for the top. Now, not to say that the top is clear, right? And I think that's the point. Everyone's, because of how much the rally has happened, people are reminded of the last cycle when things turned quite quickly. And by the way, she said it's strange that the market is pricing 5 years ahead, because you don't normally have that kind of pricing. But the latest calls coming through in the short term do suggest that this rally can still continue. JP Morgan, 9,000. Although the market breadth situation is also quite concerning, and concentration there with just two stocks effectively. Anyway, we'll talk about that later. But other things happening, of course, we talked about some of the power stocks. So we talked about China chip stocks. There's the DeepSeek update based on the information, and there's also obviously the rally across the chip space on Friday with the SOX index up 5.5%, 11% weak. And we're also getting some of the power stocks advancing here on the back of this separate story, which is interesting. I think a lot of folks miss it because of the heavy news flow. By 2030, China's actually put out this blueprint of being able to integrate AI and what the energy needs are for that broader endeavor. And market is reacting. In fact, market is trading on that very theme. I believe that's an official statement that's out. It was out, I think, on Friday going into the weekend. So look at that very closely. Indonesia, we're looking at metal stocks there. So this royalty hike that's being proposed here, we're actually down as far as those stocks are concerned.
Yeah, so what the government outlined was higher royalty rates for key commodities, so including copper, gold, and tin, to try to capitalize on these rising global prices. So some analysts have said this policy could potentially pressure margins and earnings of some of these affected issuers moving forward. So that's why you're seeing some pronounced moves on some of these miners here this morning in Indonesia. Let's kind of move on here and talk a little bit more about some corporate stories as well. Chip stocks, as we talked about after a report that DeepSeek was aiming to raise as much as 50 billion yuan. Now, that's according to the information, which says that founder and CEO Liang Wenfen may make a personal investment of as much as 20 billion. DeepSeek is also reportedly planning to speed up its model releases with a potential update coming in June. And we're watching shares of CSL. This is the Australian biotech firm. After they cut full-year guidance and flagged about $5 billion in additional impairment, the stock is down in record lows here, down some 20% or so. 15.2 billion about so, and net profit about 3.1 billion were reported for the year ending in June 30th, which missed the street. The interim CEO says growth initiatives are, quote, working, but that benefits will take longer to materialize.
Okay, we're about an hour and 20 minutes into cash market session. Hang Seng Index, nothing much going on here. I think it's going to get more compelling, let's put it that way. The rest of this week with, of course, the big summit. It's now confirmed from the Chinese side that the two presidents will be meeting. And, of course, the earnings story here with Tencent and Alibaba coming out with earnings this week.
Yeah, it seems like in terms of deliverables, I think that the bar is quite low of what really could come out, just given that, there is the potential for what happens in Iran to really overshadow what could come out, whether it's tariffs and the like, right? So, given the fact that we have seen, even when Steve was mentioning, even rail links have shown that, somehow Iranians have been bypassing ways on the Strait of Hormuz to really get to China and the like, and vice versa. That could maybe really dominate the discussions here later on this week.
Okay, so all the more reason for you guys to tune into our special coverage of the meeting this week. Lots more ahead. We will see you all tomorrow, though. Here on the China Show, this is Bloomberg.